Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
With nearly 28% in bad assets, IDBI Bank is gasping for breath. And in a bid to rescue the bank, the government claims that Life Insurance Corporation of India is ready to pick up a controlling stake. But should the state-run insurance giant own a bank? Does it not raise issues of conflict of interest? And does this set a good precedent for other PSU banks saddled with bad loans? We will be joined by an eminent panel to discuss all these and even more important question in terms of how it impacts financial stability. But first, let me bring in Sapna Das, my colleague, who has picked up some exclusive information on why the government actually rejected two private players who were ready to buy IDBI Bank. Sapna, tell us.
So clearly, sources have told us that there are many private investors who are interested in picking up a strategic stake in the IDBI Bank deal as and how that happens. But probably the government is not very comfortable with that proposition, at least at this juncture. Sources are indicating that at this juncture, giving the stake, a strategic stake in IDBI Bank to a private investor may not be the correct thing to do as far as the government is concerned in terms of the valuations and the value that will arise out of that. The other fear is that there could be vested interests in trying to buy out the strategic stake at a cheap rate. So keeping all of this in mind, clearly it's LIC that may actually romp home in this deal. Having said that, a quick look at the balance sheet size indications that 7,000 crores worth of non-core assets, 7,000 crore worth of real estate assets, and of course there's a market valuation also to speak about. So all in all, the valuations are not looking very bad, at least as of now, but probably it's not getting reflected in the current stock price. That's the key concern for the government. Apart from this, we are given to understand that post-deal, IDBI Bank will function as a subsidiary of LIC, just like on the lines of LIC Housing Finance, for instance. Last but not the least, it's going to be an acquisition by LIC, not really an investment, though of course they may be sitting at 51%. So IDBI Bank may either issue preference shares, thereby the government shareholding will get diluted automatically, and the government can sell its stake later through the divestment mode when the valuations improve, or probably the divestment route may still be open. Both these options are on the table, but the preference would be for the preference share capital issuance.
Okay, two key things then from Sapna. One, that private sector was interested, but the government thinks valuations will not be very good at this juncture. And two, it is an acquisition by LIC, not a financial investment. Now, that's important. On that point, let me invite my guests. Joining us now are former Secretary of the Department of Economic Affairs, Mr. R. Gopalan, Boston Consulting Group's Janmejaya Sinha, and Suharsh Sinha of AZB and Partners. In a bit, hopefully, we're going to be joined by Mr. M. Damodaran, Chairman of Excellence Enablers, the corporate governance company, consulting company, and of course, former SEBI Chairman. Gentlemen, thank you very much for joining me. Mr. Sinha, actually, let me start with you first. To me, it very much looks like a shortcut to reducing fiscal deficit. But separately, I wanted to ask you, Mr. Sinha, whether this is an attack, this is a risk to financial stability. Normally the government would have capitalized IDBI Bank. Now it is not capitalizing, so the total risk assets in the system remain the same, but capital is less. So as a regulator, would you be worried?
Firstly, luckily, I'm not a regulator, so I don't have to take on their worries. Secondly, there are no, I'm just saying that, look, what do public sector banks suffer from? They suffer from three problems. One is a governance issue. Second, it's an HR issue. Third, it's a capital issue, right? The HR issue and the governance issue comes because government owns more than 51% in them directly. So like UTI Mutual Fund, which is 70% owned by, 74% owned by public sector entities, does not fall under the government. It can pay people what it wants. It doesn't have the governance issues. It has Leo Puri as the MD, so it can hire talent. It has a different governance structure. So then it becomes down to the fact of capital. And capital, the price to book, starts to rise when you have more autonomy and less governance oversight. So if you were to go to a certain place where you wanted more value for an asset, you could think about this as an interesting method, because what you are doing right now is you are unburdening some of the HR constraints and the governance constraints.
Okay. Well, Mr. Sinha, let me stop you there. Mr. Sinha, let me stop you there.
Sector interest already.
No, I'll stop you there because I want to know whether that is what the IDBI Act, I mean, whether the Act allows it. See, in the first place, LIC owns LIC Housing. It has not shown a great deal of, private sector competition. Yes.
IDBI is corporatized.
I know, it is under the Companies Act. But therefore, if it comes under LIC, does it have all the freedom that a private sector, supposedly Axis Bank had? Axis Bank was owned by Sooty and LIC, and still it could, it was not governed by several of the rules. So now let me get Mr. Damodaran on this. Let me get Mr. Damodaran on this. He has been former chairman of IDBI, present at the creation, as it were, when the reverse merger happened, and of course, as a former SEBI chairman, knows the rules. Mr. Damodaran, first a short question, sir. Does it become like a private sector bank if IDBI is owned by LIC 51%?
I don't think it matters whether it's a private sector bank or a public sector bank. Is that the problem? That's not the problem.
No.
The problem is that you don't derive this existing ownership. Nothing prevents you, if the ownership is so inclined, from paying higher wages than other banks are paid. There is nothing called a common pay scale. If you think there is a case, you make out a case, you get specialists to pay people. I have myself recruited people on market salaries in public sector organizations. I don't think that's an issue. The real issue is nobody is willing to take those decisions or even consider those decisions. The second issue is, and that is a larger issue, I don't know whether you want me to address it now or later,
which is
what is the problem that we're trying to solve here? Is this a problem of the IDBI we're trying to solve, or you're trying to meet LIC's long-felt need to be the majority owner of a bank? What is it we're trying to solve?
Okay, well, we have to, I guess the government wants to sell off IDBI and at a profit, because in the case of other banks, they have to amend the Banking Regulation Act. And in this case, they don't have to. This was the stated purpose of Arun Jaitley from the word go, probably 3 years ago. But Mr. Gopalan, before I get that larger question answered, is this not a serious conflict of interest issue? I mean, if LIC, as my colleague Sapna said, will be acquiring and not making a financial investment, it can't have board seats in other banks. Surely the shareholders of other banks have a right to take the government to court on this, no?
Well, one needs to see how this is going to be structured. Is it going to be by way of buying the existing shares, or additional shares are going to be issued and then LIC is going to subscribe to it? Because that will be a way of looking at boosting the capital base of IDBI. IDBI requires a lot of capital. So issuing additional shares and then making LIC subscribe to it and then boosting its investment, holding of the company, that is one way of looking at. Another way of buying from government the existing, whatever 40% or whatever, so it gets 51% overall. There are ways of looking at as to how the acquisition can be made. I don't think any final decision has been taken on that as yet. This is what I hear. But the question is, you talked about a larger question of the conflict. Now, well, banks are owning world over insurance companies, and insurance companies also, hold banks. The question is, does LIC need a bank at this point in time from its business viewpoint? In my view, it is not required. LIC is such a vast organization with a host of people in the nooks and corners of this country who can carry on the business of LIC, and LIC does not need a bank to do its insurance business through banks. So no, I don't see why LIC with its structure, with its huge manpower, resources and agency, whether it requires a bank at all at this point in time.
Okay.
If you say that they are going to make an investment for the purpose of investing their money, I think it is not a wise investment.
Okay. Well,
so I'm not able to understand what is the reason why
to
LIC
be fair,
will
sir,
have to go?
Mr. Gopalan, to be fair, this was anyway not a way to help LIC at all. If anything, it is a way to help government finances, or it is a way to help IDBI. And as Mr. Damodaran is asking, does it help IDBI at all? But first, I want to get the legal issue clear, and therefore the lawyer. Suharsh, first of all, is there not a clear conflict of interest? Can you own a bank? I mean, RBI's rules itself say that you can only have 5% in any entity. One bank can have only 5% in another banking entity, not more. I think LIC was given some time to bring down its stake. So, first, conflict of interest. Would an ICICI shareholder take you to court?
So, I mean, presently, IDBI in any case has about 11% in IDBI, and that stake has not been reduced yet.
Yes.
So, to that extent, there could be a certain conflict of interest. I don't think that can be denied. But it really boils down to how the transaction is structured going forward. What is the amount of board representation they have? The shareholders' agreement, if there is one, then what are the powers that they have? The board representation.
51% you really have the board.
But more importantly, it also leads to other regulatory issues. If I can quickly touch upon that, I mean, the main issue that we see is that there could be a requirement of an open offer.
Exactly. Will there be? Yes.
So, on the bare reading of what we see in the press, there should be a requirement of an open offer unless SEBI makes an exemption. Now, I don't think that will set a very good precedent, because in the past we have seen that when ONGC was acquiring another PSU company, the government again made an exemption from an open offer. So if there's a trend that is coming out in the market that in case it's a government-to-government sale, then the open offer requirement is dispensed with, then what happens to the rights of minority shareholders and other private investors who invest in government companies? I don't think it's setting a very good precedent. The other thing I want to quickly touch upon is, as Mr. Damodaran pointed to, what is the problem we are trying to solve for? I see one of the problems I see being tried to solve for is the fact that the NPAs in public sector banks has reached such alarming levels, most pertinently in IDBI. So what I think we require is a principle-based solution and not ad hoc solutions, which this seems to be. Government already has the FRDI bill, which is pending in the Parliament, the Financial Regulatory and Deposit Insurance Bill, which is basically a bankruptcy code for banks. Okay. Now, that is something which has not been pushed through yet.
Oh, Suharsh, don't get down that path. I don't see that happening at all. There are too many people opposed to it, and many of them for the right reasons. But I take your two legal points that are making clear conflict of interest and bad precedent if this is set aside, and secondly, open offer necessarily should be made. But Mr. Damodaran, to the larger question now. How will it help IDBI at all? The government's idea is to get IDBI off its hands because it can sell IDBI without changing the law. That would be the government's argument. How would you answer that?
So if someone has a problem child and he walks across the street, hands over that problem child to somebody else, does that child cease being a problem child? You got to look at why the child is a problem child. Yes, there are issues of asset quality, but let us look at important issues. Look at leadership in the IDBI. You had a chairman brought in saying that he's a good chairman because he ran Indian Bank well for 3 years. Within a week or 10 days after his coming, you place the bank under prompt corrective action, which means obviously it cannot do much. So bringing in a good chairman on the basis of a track record and immediately thereafter saying the bank is under prompt corrective action is not going to get you anywhere. Now you have a chairman, admittedly a very experienced banker, and you've given him 3 months to lead the bank. What magic wand is he going to bring for where? To wave it for 3 months to see that the problems get sorted out. When you have a problem institution, what it needs is long-term incentivized leadership. And the perception in the rank and file of the organization that this person is going to stay here long enough to see us through whatever problems we now have. If at that time you get people who are there temporarily and you signal to the organization, okay, I've given you a chairman for 3 months, and he's going to find a way out.
Yeah.
I think it is very unfair to the organization. Secondly, what LIC comes in. So what does LIC bring in as majority shareholder? Is LIC going to have the right to appoint a chairman? What does it bring in? If LIC wants a bank, let it increase its shares in Corporation Bank by getting IRDA approval. It already has investment in Corporation Bank. It's the biggest investor for a long time after the government. Go and pick up that, and that bank isn't doing terribly well, hasn't been doing well for quite some time. So to say that LIC will get this bank which is going to be great for LIC, I think you're actually stretching the management bandwidth of LIC, not providing enough management bandwidth to the IDBI Bank, solving none of its problems, whether of personnel or asset quality or anything at all. And the government makes some money in the process.
Okay, well, I think for the moment, the government only wants some capital to come into IDBI Bank, which if LIC can bring, they would be happy. And as Mr. Gopalan says, if it is by a further issue of shares, then that will bring straight away bring more capital into IDBI Bank. And at a future date, probably they will be able to sell off that stake to some private investor. But all those questions I would like to ask you. A very short break. We are back with this eminent panel. Welcome back. LIC is all set to pick up a majority stake in IDBI Bank. We are asking an eminent panel of experts whether this serves any purpose, whether this breaks rules, and whether it is even ethical. We have been speaking with R. Gopalan, former Secretary DEA, with Janmejaya Sinha of Boston Consulting Group, M. Damodaran, Chairman, Excellence Enablers, more importantly, former SEBI Chairman and former IDBI Chairman as well, and Suharsh Sinha of AZB and Partners. Janmejaya, let me start with you yet again. You know, you said that there may be a little bit of, private sector treatment. You can get any kind of management and stuff like that. Now, IDBI Bank has a huge NPA problem. Even when the problem was like 2 years ago, much smaller, when Arun Jaitley and Jayant Sinha first mooted the idea of selling, and, IFC and guys like that did a due diligence, nobody wanted to touch it. Who will touch it with 28% NPAs at this juncture? Do you think reasonably LIC can ever sell it off?
You know something, if you look at the entire banking sector, what is our guess about the NPAs in the banking sector? 15%? If we look at all the institutions that are there, 75% of our banking sector is under great distressed position. What do you do in a situation like this? You have got constrained solutions. You have a political economy of what it is. You have institutions which are there. It's not as if all these problems were created yesterday or day before. These have been continuing and festering for a long time. When Mr. Damodaran came in as chairman, just before that there had been a stressed asset stabilization fund that IDBI had to deal with because its loans had gone bad. At that time, in fact, it was borrowing at a higher cost than it was lending. It was a tough situation at that stage. Some of these institutions have been institutionally flawed for a very long time.
That's right.
Changing this sector and dealing with this sector right now is a huge problem. What are the baby steps you can take before you can build a political consensus to actually deal with this sector? There will be no unanimity on this panel about whether public sector is good or private sector is good. I can assure you, in this panel, if we were to have a discussion, we'd have a discord. So in this kind of an environment, how much harder it will be in Parliament? What are the types of things you do to start to make this entire credit starved, complete squeezing out of private investment? What do we do? Investment is right now just government run. So we need to start getting the banking sector back. We do not have good solutions. None of the solutions are easy, and we will have to deal with imperfect solutions to be able to find a path forward.
Okay. No, I take your point. Actually, I would want to, if time permits, ask Mr. Damodaran whether India has never ever solved the problem of long-term financing of infrastructure. We just have not got that, unless, of course, government finances an infrastructure project. But before that, Mr. Gopalan, one of the points we got from the source who told us about the structuring of the LIC IDBI deal was that two private banks were interested, but the government didn't want to sell because the valuation will be too low. One, should the government have done that? Two, do you even believe this story? Nobody gave an EOI for Air India. Do you seriously think any private bank will want to buy an IDBI with 30% bad loans?
I really wonder anybody has the courage to buy the IDBI Bank at this point in time with 28% NPAs, gross NPAs, and 17% net NPAs, I do not know, and 55,000 crores of NPAs, I don't know who will be interested in buying. But apart from that, there are different points which have been discussed now, very important points have been discussed. What I want to mention is on the IDBI Act. This is a company under the Companies Law.
Yes.
Mr. Sinha was talking about how this could go forward. Now, the look at is this now, this already IDBI Bank is little better or little more advanced in terms of regulatory activity by the RBI. It is not like a PSB.
Yeah.
It is much bigger, much beyond the PSB.
Yeah.
And therefore it is possible to be regulated much better, like removal of CEOs.
Yes.
Under the Articles of Association of IDBI Bank, it is there. So in that sense, it is not, it's always been there. It will continue to be there because it's LIC is taking in 51% total. It will still become a government company.
Yeah.
Okay. But the CAG and all those things will still be there. But RBI will continue to regulate it little better as compared to the more freedom to look at it. The second issue is very important thing in IDBI Bank is HR issue. You see, the governance, HR and the capital issues were flagged, but most important in banks today is HR. Now, Mr. Damodaran very correctly mentioned that if you don't have stability at the top level, whatever HR changes are being brought about to ensure that the bank becomes better will not be taken very seriously. So there must be some continuity. And with LIC being brought in now as a major stakeholder, and LIC not being in a position or never had the culture of managing organizations except its own.
Yes.
Now, how do you expect the bank people working there to get the confidence that LIC will stay there for some time, for a long time to come, introduce all kinds of changes that are required to be done to, take the bank forward? I think this is going to be extremely difficult for anybody.
Okay, well, actually, both of you have, Mr. Damodaran and Mr. Gopalan, very eloquently stating that this is a series of missteps on IDBI Bank, and the last one of LIC buying it is no less a misstep. But just quickly, that point to the private sector man over here, Janmejaya Sinha, do you think if private banks were keen, government should not be selling it? Should they really rebuff a private bank who wants to buy it?
Look, I don't know whether a private bank wants to buy it. What will happen is it will be at a certain price, and the price to book will be such that it will be difficult to justify, and you'll have all kinds of cries of corruption and this, that, the other. There is a constrained situation right now, and these are bad. This is which private bank would buy this at the current price to book? They would have to sign a deal which would be quite difficult. And then there would be a lot of discussion around why it was done and whom it was given to and at what price. So there are no easy solutions right now other than a government recapitalization. And a government recapitalization with so many other banks in a similar situation, which are directly owned by them, where they are under Act of Parliament. How do you prioritize? And then there is the big question of, can you allow a bank to fail? We didn't allow Madhavpura Cooperative Bank to fail, if you recall, which was 800 crores.
No question.
So
no question of allowing
situation,
that.
No easy options. I would actually,
Yeah. No, I take your point on that. 1 minute.
So
okay.
That's where it is.
I take your point. Even I don't believe this story that any private bank would have wanted to buy. And the government's argument, of course, is that we don't want to sell it at distressed valuations. But just a word before I come to this larger question that I wanted to ask Mr. Damodaran, that we are simply not solving the problem of long-term finance, and IDBI is an avatar of that failure of the Indian political economy. Before that, regulators. Suharsh, you pointed out that RBI's rule is that if you have a bank, you can have not more than 5% in another bank. It can only be a financial investment. Likewise, you pointed out that SEBI will have to give its permission for open interest. Will IRDA also have to extend some munificence?
That's right. So I think this is a classic case where you need regulatory approvals from 3 different sectors. You need the IRDA approval, because under the IRDA Act, an insurance company cannot have more than 15% equity investment in any other company. So that is an exemption which will need to be sought from IRDA. Second, I think we discussed briefly, was the open offer exemption. And thirdly, at the RBI level as well. The other point to note is that the kind of investment we are looking at, IDBI, with the amount of NPAs it has, 8 billion, 55,000 crore. Even if you, I don't think they have yet provisioned for it.
Yeah.
And they have not even provisioned for all the NPAs that they have right now. When the provisioning hit actually happens at the bank, then the parent, which will be LIC. So LIC will have to bear the cost of that.
Absolutely.
And that's going to be, from back of the envelope, it seems going to be to the tune of $2.5 billion. That's going to wipe out the entire tier 1 capital of IDBI Bank.
Yes.
And where are we getting the capital for this from? From LIC, whose revenue model is insurance premium of life holders. You know, so that, I think of the moral hazard angle of this, we have talked about conflict of interest, but there's also see a very strong moral hazard over here. And the government dipping into LIC's coffers every time a PSU needs to be capitalized. In the past 10 years, I think there have been numerous occasions, including banks and other companies, where LIC has been dipped into as if it's a treasury.
Absolutely. Now, I mean, I think for being the youngest member of this panel, I think you're pointing out moral hazards admirably well. Yes, how much can you dip into LIC? It's ultimately, premium holders or life seekers, life insurance payers' money.
Just one more small point. The issue is that besides IDBI, there are 9 other PSU banks which are also subject to PCA, prompt corrective action. So can the banks and the investors over there expect that there'll be a bailout over there as well? You know, so it does set a very bad precedent.
Okay, well, I take your point on that. But first, Mr. Damodaran, before I come to the longer-term issue, regulators' independence is going to be tested, right? All 3 regulators have to extend forbearance.
Regulatory credibility will be compromised, and it will be very difficult to recover every time somebody wants an exemption if you are required to give. And this, as was pointed out, all 3 regulators, in fact, need to grant exemptions, which is a terrible thing to happen. I mean, a single regulator giving an exemption in a single case is bad enough.
Yeah.
But this is going to give rise to expectations from everyone that, should an exemption be required at some point of time, you only have to ask for it. But going back to a larger question, Janmajay mentioned the Stressed Asset Stabilization Fund, which I had created when I was chairman IDBI. The NPAs at that time in percentage terms were nearly as much as they are now.
Okay.
But there was a restructuring plan that was put in place. There was a merger of the institution with the then IDBI Bank. We wanted to run it as 3 separate SPVs, one for all the shared resources and separate pay scales sitting in the bank as well as in the institution.
Yes.
We had a credible plan. It seemed to be working, and then somebody turned it upside down a little later, said that you cannot give preferential treatment to the people in the bank. Mind you, it was a private sector bank, the IDBI Bank, in its earlier avatar.
That's right.
If there is an intention, just rewind to 1995-96. Indian Bank was a basket case. Everybody wrote off Indian Bank. I know today I can claim with some justification I was one of the few people in the Ministry of Finance who said that we should work on this. Today, Indian Bank is one of the 2 banks that has given dividends to the government of India. None of the others have given dividends.
That's right.
In this particular year.
Yes, sir.
You have to see, you have to invest in the people. It's not that all the people there are bad. I think IDBI even now has great people, but you can't hold on to them.
Yes.
If this is a kind of, lack of continuity in leadership, uncertainty regarding the future of the organization, everybody trashing the organization, every employee there being tarred with the same brush of being not measuring up. These were at one time some of the best guys in the business.
Yes.
If IDBI did a credit appraisal, everybody else said that was good enough for them. From that, you have allowed the bank to come to this. Clearly, there must be people who start with the assumption, how can we save the bank? If you start with the assumption, how can we sell the bank? Then ultimately you will end up putting the pressure on LIC policy holders just by way of the personal detail. I too am a policy holder of the LIC. You think I'm terribly excited that LIC is going to make this kind of an acquisition, or call it what you will. So you get regulatory concessions which don't make sense at all. You get LIC which say they are apparently they quoted as saying that they want to have a bank. What they will bring to the bank, I don't know, because they don't have, as was pointed out by one of the other panelists, what experience do they have?
Absolutely.
I think Mr. Gopalan who said, what experience do they have in running the bank? Has their presence in the corporation bank, I think the very large shareholders. Has it made Corporation Bank a shining example for the banking industry in India? So I'm not faulting them. That's not their area of expertise.
Fair point, sir.
So bring in somebody who can run the bank. Bring in somebody who is committed, challenge the person, compensate the person adequately, give him or her at least 7-8 years, and say, take the ball and run. And I'm sure that you can find such people in India. If you start with the assumption, I want to sell the bank to find a solution, then you're throwing out the baby with the bathwater.
Okay. Well, especially in this case, when the problems it has are interconnected with the bad loans of all the banks involved. So clearly, you have to solve power sector cases and you have to solve infrastructure cases. But Mr. Gopalan, before I let you go, sir, any comments on the statements already made that too much of regulatory credibility will be on the line? And secondly, ultimately, is this just a shortcut to fiscal deficit reduction?
Okay, let me cover two other points which I wanted to do. Very interesting points, I thought. One is the financial health of LIC. Have people started looking into that? You see, today LIC has, total of 24 lakh crores of AUM, assets under management, out of which about 6 lakh crores are, investment in equities in the secondary market as well as in the primary equity. Now, out of which, they hold close to about 1.75 to 2 lakh crores in government PSUs and government banks. Now, what kind of a return they are getting on that? Now, in the last about 3-4 years, they have been asked to subscribe to all the issues which the government PSUs have come up with. And they have blocked their money there in a very, very big way. So, should we not, with a 100 crore equity LIC under government guarantee, with its solvency ratio being one of the lowest among the life insurers in the country, are you doing the right thing to LIC by asking them to buy another very equally sad case of IDBI Bank? This is something which we need to look at. It's easy to say LIC has problems. Please understand it has problems and see whether you are doing the right thing by asking LIC to get into this. One. Second, on the second thing is about the financial stability issues.
Yes.
Look, now it is going to be with LIC taking over this bank, it will have two regulators. RBI will look into the bank. IRDA will look into LIC. Now, for a financial fiscal FSDC looks into financial stability. Now, RBI, because being the lead this thing in the FSDC, may have to look into the financial stability of LIC also at some point in time, because LIC has invested in the IDBI Bank.
Absolutely.
So let us look at that as an issue which can crop up at some point in time in future.
Absolutely.
Your question about fiscal deficit. Your question about fiscal deficit. Yes, a 10,000 crores money coming by way of your divestment. We are budget of 80,000 crores or whatever. A 10,000 crores coming from one institution is really great. I'm not saying that it's a trifle to be trifled about. It is a good amount of collection by the government. Government can unlock the UTI asset management. They got a number of other shares which they have got.
Yes.
Let them unlock them and make money out of that. It is possible for them to make good money out of that too. So my view is that fiscal deficit can be managed in a number of ways, and this is if you look at only as fiscal deficit as a major factor for this transaction, okay, but it has got a lot of problems on all the other agents who are brought into this particular play.
No, I'll tell you why I got this fiscal deficit doubt. Just yesterday, my colleague Shireen Bhan was speaking to Jayant Sinha. She repeatedly asked him if there was any truth to the story that LIC would be asked to invest in Air India. He did not say no. To be fair, he didn't say yes either. But he didn't answer that question at all. It was ducked. So one gets a doubt that is this also a divestment tactic? You couldn't get through with Air India anywhere. And so are you trying to make some money by dipping into LIC? And that's exactly the point that Mr. Gopalan is raising, which I want both Mr. Sinha and Damodaran to answer to. Are we going to really create financial stability problem? Yes, sir. Please, go ahead.
I just wanted to make a point. Look at the history over the last couple of decades in India, or maybe the last 2.5 decades. UTI was a basket case. Yes. Today, UTI is able to The UTI has the solution to part of the fiscal deficit problem of the government. Indian Bank was a basket case. Indian Bank is one of the two banks that has given dividends. Work on the problem. Work on the problem. Don't give up. Don't throw up your hands and say we got to sell. That's the only point I want to make.
Yeah, Mr. Damodaran, I can see that they are spoiling your record. It was your record to have solved all the three cases, and now Indian Bank and UTI still remain successful cases of solutions which Damodaran offered, and this one has been mucked out. No. I was just, that was on a lighter vein. Yes. But I really want to come back, take a break now, and come back and ask you this question. If you keep dipping into LIC in this fashion, then are you not creating a huge financial stability problem? In the 70s and the 80s, we did it with the public sector banks. Sell as much amount of ad hoc treasury bills to them and treat them like part of the fisc. We treated that with US 64 as well and ran it aground. Are we now going to create a behemoth of a problem by dipping into LIC without let or hindrance?